Shiseido Hit by China Slump, shares plunge. Have you ever wondered what happens when a luxury giant stumbles? Today on Millennial Money Minds, we're exploring the dramatic fall of Japan's Shiseido, a beauty brand synonymous with prestige. Many assume luxury brands are immune to market changes, but Shiseido's recent struggles show that even industry leaders can falter. Why did this happen, and what does it mean for the luxury sector? Stay with us as we dive deep into the story, uncovering the numbers, challenges, and strategies that lie ahead. Let's set the scene. Shiseido, a brand that's become a household name in beauty and skincare across the globe, recently faced its most significant stock drop in over 3 decades. Imagine that it's one morning in Tokyo, and the stock market opens to chaos for Shiseido. Their shares plummet by a staggering 15.5%, the sharpest one-day decline since October 1987. For a company of Shiseido's stature, which has been a pillar in the luxury beauty industry for nearly 150 years, this is nothing short of a financial earthquake. The stock tumbled more than 700 yen in one day, landing at 3,810 yen. To put it simply, this was a free fall that no one saw coming, or did they? The catalyst for this dramatic downturn? A slowdown in China, one of Shiseido's most critical markets. In its recent half-year earnings report, Shiseido revealed a shocking operating loss of 2.7 billion yen, roughly $18.44 million. This came in stark contrast to the same period last year, where they reported a healthy profit of 13.6 billion yen. The difference is night and day, and it all comes down to one major factor: China. China's economic landscape has been shifting, with growth slowing and consumer confidence taking a hit. This shift is particularly impactful for luxury brands that have heavily relied on Chinese consumers, who have been major spenders in the luxury market for years. Shiseido, like Cartier owner Richemont and Gucci's parent company Kering, is feeling the pain of this slowdown. The company's sales in China fell by 7% in the first half of the year. Why? Because Chinese consumers are pulling back on spending and instead are choosing to save. A wave of caution has swept across the market, and it's causing ripple effects throughout the luxury sector. But that's just part of the story. Shiseido's struggles don't end with China. The company also took a significant hit in its global travel retail sector, a segment that includes duty-free shops, which have historically been a goldmine for luxury brands, especially with Chinese tourists. This sector saw a massive 23% drop in sales year on year. For Shiseido, which has leaned heavily on this channel to drive growth, this was a major blow. It's not just about the declining numbers, it's about the strategic pivot the company now faces. Amidst this turmoil, Shiseido's performance isn't universally bleak. In its home market of Japan, sales surged by 13% during the same period. This growth, fueled by a strong domestic market and a rebound in tourism, shows that Shiseido still has some bright spots. Similarly, in Europe, the Middle East and Africa, MEA, the company saw robust growth of 12%, largely driven by their focus on skincare and fragrances. These regions are stepping up, proving that Shiseido's appeal extends beyond just China. The company is leveraging its strengths with high-end brands like CLE de Peau Beauté and NARS, which have continued to perform well, even amidst the global luxury downturn. Now you might be wondering, what's next for Shiseido? How does a company of this size and reputation navigate such stormy waters? Well, they're not backing down. Instead, Shiseido is doubling down on its efforts to rebuild in China and adapt to the changing economic climate. The company is focused on developing a sustainable profit delivery business model, tailored specifically to the nuances of the current market. Part of this strategy involves significantly ramping up their online platforms in China, where digital engagement presents a high growth potential. Also, Shiseido is cutting costs and intensifying its marketing efforts to better resonate with Chinese consumers. And there's more change on the horizon. In a move that signals a fresh approach, Shiseido is preparing for a leadership shift, with Kentaro Fujiwara set to take over as CEO next year. His leadership will be crucial as the company navigates these turbulent times. The luxury beauty industry is highly competitive, and adapting to changing consumer behaviors while maintaining brand prestige will be no easy feat. But here's the silver lining. Even amidst all this turbulence, Shiseido has not lost sight of its core strengths. They're investing heavily in high-efficacy, high-function products, and focusing on enhancing brand awareness through collaborative marketing. For instance, their Drunk Elephant brand continues to gain traction globally, and their commitment to premium products is unwavering. The luxury market isn't immune to economic shifts, as Shiseido's struggles show. The path forward demands strategic moves and strong leadership. Will they recover or face deeper issues? Stay tuned to Millennial Money Minds for insights. Like, subscribe, and share your thoughts in the comments below. Let's discuss it.